All right, a lot of investors are asking about ASML stock after the company reported quarterly financial results, and the stock fell by 17% almost immediately, and then a couple of more percent in the days after the earnings release. So I thought this would be a good time to do a discounted cash flow valuation of ASML stock and answer the question of how much do I think ASML stock is really worth, using several estimates and assumptions about the company's growth in cash flow, growth in earnings per share, and evaluating the company's risk to determine what the valuation will be. Now, this should be for entertainment purposes only. As you're going to see, I'm going to use several estimate and assumptions, which makes this calculation very imprecise. But I'll share with you precisely where I'm getting all these numbers from, so you can determine yourself whether or not I'm making a good valuation, whether I'm being too pessimistic or too optimistic. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the numbers I'm going to need is the current market price so that I can compare my intrinsic value per share calculation with the current market price to determine if the stock is under or overvalued. The next number I need is the company's free cash flow, which came in at $3.073 billion in the most recent trailing 12 months. And that's down significantly in the last couple of years as the company is investing ahead of a buildup in demand. So when a business does this, their cash flow from operations or free cash flow decreases first, and then it jumps higher as the company takes those inventories that it builds up and turns it into cash flow. First, cash goes out to build inventory, which is what ASML is doing now. Then cash comes back in when the company sells that inventory and turns it into cash. Right now, ASML is in the period of building up inventory in anticipation of a jump in demand. I also need the company's average share count. Right now, the diluted shares outstanding stand at 394 million. And then I need the company's long-term debt, which stands at $5.24 billion. I also need the market cap at $284 billion and the cash and equivalence balance of $5.561 billion. I need the company's beta, which I get from Yahoo Finance at 1.05. And I need the estimated growth rate. And I'm going to use the Wall Street analyst estimate for ASML and their expected earnings per share growth over the next 5 years of 21.77%. That's the initial growth rate in free cash flow I'm going to use for ASML over the next 5 years. All right, so now that we've got all the numbers we're going to need, I can jump in to the company's discounted cash flow valuation model. Now I want to draw your attention first up here to where I have the free cash flows for 2024, and you can see I have in there $6 billion. Even though the company's free cash flow in the trailing 12 months was closer to $3 billion, remember I talked about the cash flows are down right now temporarily because it's building up inventory. And so to make an adjustment to that, I adjusted upwards the company's free cash flow estimate to $6 billion. Now you might think I should not be adjusting it. You might think I should be. I'll do a calculation at the end using the existing free cash flow for the trailing 12 months, and you can see the difference that it makes. Okay, so when I forecast the next 5 years of free cash flows, I'm using that 21.77% growth rate I got for the EPS expectations over the next 5 years. And then for the 5 years after that, I'm using a transition period growth rate at 50% of the short-term growth rate, which is at roughly 11%. And then I have the company settling down to a longer-term growth rate of 5% from the year 2035 and beyond. So in addition to forecasting these free cash flows over the next 11 years, we also need to discount them back to today because money in the future is of course worth less to us than money today. So we need to discount those cash flows because they're in the future. The discount rate I'm using is roughly 10%, and I got this discount rate by using the weighted average cost of capital and using the capital asset pricing model to get the cost of equity at 10.3%. Using the company's beta of 1.05, a market risk-free rate of 4%, and a market risk premium of 6%. Since the company only has $5 billion in debt and a market cap of $284 billion, I have a debt-to-equity ratio of 5% versus 95% equity. So when I discount those free cash flows back to today, the present value of the free cash flows over the next 10 years comes in at $91.7 billion. Then, in the year 2034, instead of forecasting the cash flows from the year 2035 out to infinity, I can use the terminal value formula to discount all of those future cash flows back to the year 2034, and that value comes in at 553 billion. If you're wondering the formula for this, it's the expected cash flow in the year 2035 divided by the weighted average cost of capital minus the growth rate. In my formula, the weighted average cost of capital is 10% and the growth rate is 5%. That's how I get this terminal value. Then I need to discount this terminal value back to today, and I use that same weighted average cost of capital to do that. And that gives me the present value of the terminal value of 211 billion. In sum, the total of the value of operations comes in at $302 billion. But we're not done yet. We need to subtract the company's debt and add the company's cash balance to this total. So that will give us our value of equity of $303 billion. And then to get the price per share estimate, we divide that by the number of shares outstanding, which is 394 million. And when we do that, we get a value per share for ASML stock at $770 per share. That's my intrinsic value for what I think ASML stock is worth today. Now, you can compare that with the existing market price of $722, and you can see there's some upside to ASML stock, and it is undervalued according to my calculation. But remember, I adjusted upward the cash flow. The company's actual trailing 12-month cash flow was $3 billion, and I put it in at $6 billion because I understand that the company's building up inventory, which is going to turn into cash flow. So valuing the company at this temporary low base of free cash flow might not be as informative as taking a more of a midpoint between where the company's free cash flow is likely to settle in at the midpoint of a cycle, right? This is a semiconductor business. It goes through cycles of ups and downs. You don't want to value the company at the peak, right? You don't want to take the value here at 12 billion. Even if we were at this point in time, I wouldn't take this value. I would adjust it downward slightly. And now here at this point in time at the bottom, I adjust it upward because it's a cyclical business. So I want to take more of a midpoint rather than the low or the high in the business free cash flow. That's why I adjusted it upward to 6. But let's say if we adjust it back down to 3 billion, where it's actually at, then the intrinsic value per share would be $386 per share. So it would be significantly lower than where the current company's value is. However, I don't think that's a prudent way to value this business in particular, given the dynamics going on inside of the business. However, if you did choose to do that, this would be the value you would get. And in that estimate, you would feel that ASML stock is overvalued. But in my estimate, using the adjusted free cash flow of $6 billion, I calculate the stock is undervalued. Again, do your own due diligence. This is just one tool you should use in your toolkit to evaluate ASML stock. And this one is for entertainment purposes only. You should do your own calculations and come up with your own decisions on what you think about this business long term. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.